Micheal Burry, the famed investor, who famously foresaw the housing market meltdown of 2008 and made a fortune by betting against it, has been warning of another financial disaster on the horizon. Burry made his money by betting against the crash. Burry sees indicators of an economic slump that might be even worse than the one that just occurred, which is happening at the same time as the world economy is continuing to struggle with the effects of the COVID-19 pandemic. Nevertheless, he is not only raising the alarm, rather he is recommending particular assets that investors should think about purchasing in preparation for the forthcoming economic downturn. So, what exactly are Burry's recommendations for the best assets to invest in? Let's take a more in-depth look, shall we? Number 1. Gold. Gold has, for a very long time, been regarded as an asset to hold on to during times of economic instability. Burry is a strong advocate of the precious metal gold, and he has been slowly building up his personal holdings of the commodity. His point of view is that gold is not only a hedge against inflation, but also a store of value that may shield investors from the volatility of the stock market. Number 2. Farmland. Also, Burry is optimistic about the financial potential of agricultural land. He is of the opinion that food production will become increasingly vital in the years to come as the population of the globe continues to expand, and that farmland will be a valuable asset in this situation. In addition, farmland has the potential to create income from crop production, as well as rental income from farmers who lease the property. Number 3. Water. Burry has referred to water as the oil of the 21st century, and he is of the opinion that it is an essential resource that will only continue to grow in value over the course of the next years. He believes that there are profitable chances to be found in investing in businesses that are involved in the infrastructure of water, such as desalination plants and water treatment facilities. In addition, he is of the opinion that owning water rights or investing in water exchange-traded funds, ETFs, can be a method to capitalize on the growing value of this scarce resource and turn a profit. Number 4. Selling or shorting index funds. Burry is bullish on certain assets, but he is also warning investors about the perils of passive investing in index funds. This is despite the fact that Burry is bullish on certain assets. According to him, the enormous amounts of money that are being invested in these funds are contributing to the formation of a bubble that is not founded on the fundamentals. He is of the opinion that the prices of many different equities are excessively high, and that a market correction is on the horizon. As a result of this, he suggests selling short index funds as a method of making money off of the impending fall in the value of the stock market. Number 5. Tail risk hedging techniques. Last but not least, Burry is a firm believer in tactics known as tail risk hedging, which are devised with the intention of shielding investors from severe occurrences like market crashes. He has stated that every serious investor in today's market environment cannot do without these tactics in order to be successful. These techniques may include the purchase of put options or other derivatives that might serve as a hedge against the volatile nature of the market. In conclusion, Micheal Burry's suggestions for the best assets to purchase in preparation for the forthcoming recession reflect his opinion that the global economy will be confronted with substantial challenges in the years to come. Although some of his suggestions, like gold and farmland, are more conventional investments, others, like water rights and shorting index funds, show his one-of-a-kind take on the way the market is now functioning. Before making any decisions regarding their portfolio, investors should always give serious consideration to their individual investment objectives and level of comfort with risk. Yet one thing is abundantly clear. In the face of the ambiguities presented by the current state of the economy, it is to one's advantage to pay attention to the observations of a renowned investor such as Micheal Burry.